Good morning, good afternoon, and good evening. This is Connor, and today I'm going to answer a question that a client asked me, which is, should I put 20% down on a home? And I'm going to give you 5 reasons you should and 3 reasons you should not. Let's get into it. So the first reason you might want to put 20% down is you might be able to get a lower interest rate. And the reason for that is because your lender obviously is going to be assuming less risk perceived wise if you as the borrower is putting more money down, because it just shows that you're more invested in the deal and you're less likely to foreclose or default on your payments. Number 2 is going to be a lower monthly payment, which might seem pretty obvious. Basically, if you're going to be putting more money down, then you're going to be borrowing less money on the home. If you borrow less money, your monthly payment's going to be lower. But some people, it makes more sense for them to do this because they're a little bit worried about a higher monthly payment, and maybe they're not as structured or disciplined with their money, and so they'd rather make sure that their monthly payment can be at a lower amount they know they can definitely pay, even if they decide to spend a little bit extra that month, versus maybe putting less money down and having a higher payment and having to be a little bit more disciplined in how much money they're allocating towards their mortgage from their total salary. Number 3 is going to be having a competitive edge in a bidding war, which is pretty relevant right now with everything going on with buyers. Being able to put 20% down in your offer as far as the financing might make your offer a little bit more competitive in a very competitive multiple offer situation, and might make the seller more likely to choose you because it just shows that you're a little bit more financially qualified and you're more likely to get approved and have issues with lending than someone who's maybe only doing 3.5% down or 5% down, and they don't have as much cash. And so it's going to be maybe just a little bit tougher for a lender to approve them and get them done than the 20%. Now, this isn't always the case, but again, this is a slight benefit that you could pitch to potential sellers. Number 4 is going to be not having to pay PMI insurance when you're paying your monthly payments each month. All that PMI is it's just a way for lenders to reduce their risk of loaning out money to you for people who don't have as much equity in the deal, if they have less than 20%. Now, the thing with the PMI insurance is that with appreciation and with actually paying down the loan over time, you can actually get the property reappraised. And if it appraises for, let's say 10% more and you put 10% down in equity, you can get that PMI removed anyway. So it's often overplayed with people in terms of why they need to put the 20% versus not. But it is an advantage. So it is a benefit, not having to pay PMI insurance. So that is one benefit of putting the 20% down as well. So the 5th reason you should put 20% down is if you have a lot of extra savings that you do not need. And by do not need, I mean you don't have anything potentially coming up that you could get in a tight pinch and need to pull that money out and have it liquid, whether it's cash to pay off a bill or anything like that. So for that money that's just kind of sitting there in the bank and you're getting like a quarter a month in terms of interest from the bank because it's so low, it might make more sense to put that money into the real estate property, which is going to appreciate, and you'll be able to gain some better interest on that than you otherwise would in like a savings account, for example. All right, guys, that wraps up the 5 reasons you should consider putting 20% down. But let's talk about the 3 reasons you should not. Number 1 is going to be taking advantage of low interest rates. So when interest rates are as low as they are right now, at 3%, or sometimes people even getting just a little bit less, it might make more sense to leverage the bank's money than it is to use all of your cash to finance the deal, because the cost of that money isn't as high as if interest rates were at 5 or 8 or 10%, which they have been at one point in the past. But if they're around 3%, well, that's pretty low. And so it might make more sense for you to put a lower percent down and to leverage the bank's money. And going along with why you might decide to not put the 20% down is number 2, which is going to be your repairs budget and reserves. By repairs budget, I'm talking about the money that you need to repair the house to get into the condition that you want it to be in. And maybe not like your 10-year fantasy vision for the home, but as far as making it into a livable condition, obviously, but also a condition you just want it to be in. If you really want those countertops, for example, or you really want those floors put in or one bathroom redone, then having that money to go ahead and do that. And maybe based on your closing costs, if you put 20% down, you're not going to have enough money to do that. So that's one consideration why you might not go ahead and put the full 20% down, because you're buying a place that needs a little bit of work for it to get in the condition you want. And so it's smart to save a little bit of money, especially if the interest rates are low, that you can go ahead and do that. And now the second part of that is reserves. When I'm talking about reserves is I'm talking about a rainy day. If something were to happen, whether it's an unfortunate health event or a work event or employment or something like that, having some reserves in your bank that you can go ahead and use if needed for something like that. Now, if you were to put the money into your property, yes, you could get a home equity line of credit, something like that. But some people like kind of having a little bit of reserves that are more liquid, that are cash. So keeping that money outside of the property and having it be a little bit more liquid for things like that, whether maybe it's also a vacation reserve. That's one reason why you also might not want to put 20% down. And then your third reason is going to be the opportunity cost of that money. So if you have a 3% loan, for example, and you're putting 20% down, but you could make 7% with your money elsewhere, well, maybe it makes more sense to go ahead and put 5% of the property down, and you're getting charged that 3%. And then you're going to take that extra 15% and put it into that investment opportunity where you can make 7%. And then you've got really a 4% spread there between the 7 and the 3. And that's what the opportunity cost means right there. Is basically it makes more sense to put your money into that 7%, ROI investment than it does to put your money into the property where it's costing 3%, because that 4% spread is some gains for you. So there you go, guys. If you're considering putting 20% down on your home and you're thinking, should I do it or should I put less? The 5 reasons, again, why you should in general are going to be: 1, being able to get a lower interest rate. Number 2, having a lower monthly payment because you're borrowing less money. Number 3, having a more competitive edge in a bidding war if you're in a very competitive buyer's market, which we're seeing a lot of right now. Number 4, not having to pay PMI insurance. And number 5, having extra savings you don't necessarily need for anything at the moment or in the near future, and being able to invest it into something like real estate. Now, again, the 3 reasons why you shouldn't put 20% down, at least for you to consider, are going to be: 1, taking advantage of low interest rates. If interest rates are low, maybe you want to take advantage of those versus taking all your money and putting it into the property. Number 2 is going to be repairs budget and reserves, as far as making sure you have enough money in your bank account to go ahead and cover the repairs or renovations you want to do to your property after you buy it, as well as reserves for a rainy day. So maybe you need a little extra set aside, and if you put the full 20% down, it's going to kind of clean you out. So you decide to put a little bit less. And then number 3, as far as why you shouldn't put 20% down, is if the opportunity cost of your money is greater. Basically, if you can invest it somewhere else and make more money, then the interest rate's going to charge. It makes more sense financially to do that. Well, that wraps it up. I hope that answered your question as far as whether you should or you shouldn't put 20% down. But if you have any additional questions, go ahead and comment them below and I'll be sure to answer them. If you like this video, go ahead and give it a like. And if you like real estate, if you want to learn more about it, just in terms of market updates or maybe even specific topics like this one, go ahead and check out my YouTube channel where I make more videos that are just like this, super easy to understand and nice and straightforward. But that's it for me today. So until next time, this is Conor Green. Have a great day.